U.S. consumer spending heats up amid rising inflation. Last month saw a slight uptick in consumer spending, but it came hand in hand with rising inflation, a scenario that has many economists keeping a close eye on the economic landscape. Despite the presence of tariff-induced price hikes on store shelves and online, American consumers continue to spend money, contributing to overall economic growth. According to the latest data from the Commerce Department, consumer spending increased by 0.3% in June compared to May, when spending remained stagnant. When adjusted for inflation, spending only marginally increased by 0.1%. This report offers a detailed view of price changes, household incomes, spending patterns, and savings rates. One of the key findings was the acceleration of inflation. The Personal Consumption Expenditures (PCE) price index, which the Federal Reserve uses to monitor inflation against its 2% target, climbed by 0.3% in June, pushing the annual inflation rate to 2.6%, the highest level since February. Tariffs are beginning to have a more noticeable impact on overall inflation rates. However, Gus Foucher, chief economist at the PNC Financial Services Group, notes that consumers, who drive over 2/3 of economic activity, are managing relatively well. Consumers are largely holding up okay, Foucher commented during an interview with CNN. The report also revealed that personal income grew by 0.3% in June, and the savings rate remained stable at 4.5%. We're seeing modest growth in consumer spending, Foucher explained. However, the economy has slowed over the past year, with reduced job growth, lower income gains, and consequently, slower consumer spending. Adding to this slowdown, tariffs have introduced both price increases and uncertainty into the market, prompting consumers to become more cautious with their spending. Economists anticipated a 0.3% rise in PCE from May's 0.2% figure, with an annual inflation rate acceleration to 2.5% from the previously reported 2.3%. The annual inflation rate for May was revised upwards to 2.4% in the latest report. Excluding volatile sectors like energy and food, the core PCE index showed a faster increase of 0.3% in June, up from May, marking the quickest gain in 4 months and maintaining an annual rate of 2.8%. The slight rise in the PCE price index was partly due to rising gas prices, which had been declining throughout the year, and higher-priced goods as businesses passed on tariff-related costs to consumers. The report confirmed these expectations. Energy prices surged by 0.9% after dropping 1% in May. Goods prices rose by 0.4%, with durable goods up 0.5% and non-durable goods up 0.4%, the highest monthly rate since January, following the post-holiday discount period. Durable goods prices increased by 0.5%, Foucher noted. While these fluctuations can vary from month to month, this suggests that tariff costs are being passed along to consumers and will likely see more of this in the coming months. President Donald Trump's trade policies, featuring widespread and volatile tariffs on imported goods from various countries, are gradually leading to higher consumer prices and elevated inflation rates. Although the tariffs are primarily paid by the importing companies, these increased costs are frequently distributed across the supply chain and often passed on to consumers. While the higher tariffs aren't expected to cause an inflation spike similar to what Americans experienced in 2022, the price hikes will pose challenges for many individuals. Consumers will find it uncomfortable, Foucher predicted. They'll start to notice that their paychecks aren't stretching as far as they used to. Stock futures showed little movement following the release of the spending and inflation data. Dow futures climbed by 100 points, or 0.23%, while S&P 500 futures advanced by 0.92%, and NASDAQ 100 futures rose by 1.33%. This report has been updated with additional insights and background information. Contributions to this report were made by CNN's John Talficki.